Welcome to the B.F. Anderson Technical Report for March 11th. As you can see here, NASDAQ has pulled back. Now, it's been a correction very similar to these corrections here. We will note down here, though, that we haven't really gotten much of a volume signature. You can see here 3 days ago, high volume. We need to see a volume day higher than that, similar to what happened back here, to see that this correction is pretty much over. But we've had a pullback. We've had a correction in the market. Continue to stay defensive at this point. However, on the weekly reading, we're getting a bullish reading here because we're above the 35-week moving average and continues to be in an uptrend. So overall, we're still in a bull market. Now, I'm going to make some changes this week. I went ahead and brought on some different charts to kind of open up a little bit more to the short term versus the long term. I took away the monthly graphs. They just don't change that much, but they are valuable information, and we will refer to them over time. Now, here's the NASDAQ. As you can see here, this is the 10-day moving average. The NASDAQ peaked around February the 16th, came down pretty aggressively, broke the 50-day, came down and made this low. So what we're looking for here is we want to see some volume days that are above the selling days. So we want to see the buyers are coming back into this market, which we are seeing a little bit of an improvement in the last couple of days, but not enough. But if you look at the mid-cap index, which is the middle-sized companies, you can see they're breaking out to new highs. So we have what we call a split market. Here's the New York Composite, same thing. Basically breaking out to new highs. Everything's very positive there. This is a very constructive pattern. Here we have the small cap stocks, all-time new high, looks excellent. So you can see here that the confusion is the NASDAQ, which is mainly the technology stocks, have been getting hammered, but in the meantime, a whole new group of stocks are starting to emerge, and this is called rotation. Now, here's the S&P 500 large cap. You can kind of see the same pattern. We pulled. You've got a downtrending 10-day moving average. We want to see that turn up, and we want to see higher volume. Right now, we're not screaming bulls. We are in a correction still, but it's looking like it's getting towards the end of it. We'll just have to see. Now, here's the aggression index. You can see here major sell-off in the aggression index, broke below the 50-day moving average. This is a comparison of the NASDAQ, which is the technology stocks, to the consumer staples. You can see a lot of change there. Now, the actual indicator is still positive because we're above that 40-week moving average, still constructive, but you can see it's really starting to come down after a major up move. So just be aware of the fact that technology stocks are really kind of taking it on the chin right now. Here are the economic indicators that are kind of causing some of this. We got a spike in interest rates. We've stabilized around 1.5% on the 10-year Treasury. You can see that the price of oil has continued to stay in an uptrend. As long as we're making higher lows and higher highs, that's an uptrend. So oil is in an uptrend. So is the financial stocks, because the financial stocks will benefit from higher interest rates. New lows. We're not really looking at the new highs anymore. I just don't think it's that as valuable. The new lows kind of tell you something here. Look at the number of new lows that we got here recently, the highest we've had in quite a while. We had 150 new lows. So the rule here is that if the market's making new highs and new lows are exceeding 40 a day, which last 2 days they have not, looks like things are starting to settle down. Like I say, here's your correction. Things are starting to settle down a little bit. Let's just have to see what happens here. Here's the put-call ratio. Again, we're continuing to be in very high levels of greed. However, we can stay here for a long time, but you can see that we're starting to see some transition here from greed to fear. We're just not even close yet. Here's the VIX, which is a measurement of volatility in the market. Continues to stay below 30, which is constructive. Now, I wanted to take a look at a few areas that I thought was interesting. This is the consumer discretionary stocks. These are stocks like things that you wouldn't have to buy, like toothpaste and soap. These are things that are discretionary. You can see here somewhat of a breakdown in the group, a little bit of a cause of concern. Again, this is where the correction is taking place. Here's the semiconductor index, which is somewhat technology. You can see this is where the correction is really taking place. Here is some of the stocks that came out during this Robinhood, GameStop scenario. This was one of them, a company called Blink Charging. You know, electric charging, fine, that's great. You can see here we got the buy signal back here, but you can see here we're starting to see these violations of the trend, then it comes right back down again. So these stocks have been real popular with the social networking crowd, and you can see they're starting to cave in. Look at this one here. This is Virgin Galactic. Same thing, rallied up, came right back down again. This is the kind of stuff that is really typical of market tops in certain sectors, and the sectors that I would think are topping are the ones that everybody's on social media looking at. So this is the Invesco Commodity Index. I wanted to show, now this is, just showing commodities as a general rule, oil, metals, various grains, wheats. You can see here it's starting to break out of a downtrend. So we're starting to see some whiffs of inflation. Oil. Here we have oil. If you think about oil has moved sideways for 16 years, according to the XOY, which is the oil index. The index has moved sideways for 16 years. Nobody's made money in oil stocks for 16 years. So is that getting ready to change? Is this the beginning of a new cycle? We'll have to see, but we are seeing some improvement in those sectors. Here's an example. This is the top 5, Cimarex Energy. You can see here stock basically broke out of above that base right there, has been rallying strongly, hit an all-time new high, pulling back, holding the 10-day moving average, looks somewhat constructive. Here is FANG, which is another, which is Diamondback Energy, which is a West Texas fracker. You can see here basically broke out on a gap up here, had another gap up, somewhat peaked and pulled back a little bit, but continues to look constructive. Here is Penn National Gaming, which is online gaming, somewhat moving sideways. Continue to watch. Here is SM Energy, definitely in an uptrend. These oil stocks are in uptrends, and if you notice of our list here, of the top 5, most of them are oil stocks. What a change this has been. So SM Energy looks interesting. Here's Tapestry, one that we own, continues to be in an uptrend, holding that 10-day moving average, pulling back a little bit today, however, continues to look constructive. So if you have any questions, please give me a call. Thank you very much.